the Chinese don't do a lot of exploration.
No.
They want the project advanced.
Yeah.
And they won't pay you anything for exploration if they do buy you. Their big advantage for somebody that's selling to them is they bring cash.
Yeah.
So whether it's Equinox selling a Brazilian portfolio for $1 billion to get rid of low-cost capital, get high-cost capital in their balance sheet, the beauty of selling it to the Chinese is they'll give you 90% of that $1 billion is upfront cash.
We're coming to you from PDAC 2026, where the global mining industry is gathered to discuss the future of critical minerals. Host Joe Webb sits down with industry veteran Joe Mazumdar of Exploration Insights, a geologist, analyst, and investor who's worn about just every hat in the mining industry. Together, they explore the full journey of the sector from exploration, geology, through to production and investment, and what it all means for the space of critical minerals.
Why should the average person care about what's happening in the mining industry today? If you were talking to someone, a year 6 student at school, like, why should they care about what's happening in the mining industry?
Well, I think they always should care because it goes into everyday life for them in terms of metals. But now more so than ever is that in terms of investments in that funds that they might not be aware of that they're invested in are actually investing in mining now in the sector. So to get a better idea of what's going on, and people talk about critical minerals, and we've seen what's happened with the gold price and the silver price, it's a good thing to understand what the mining sector is all about and the ins and outs. And I'm seeing that from funds that have made a lot of money off of AI and other things, and now are trying to go to a different sector that's undercapitalized, and they're looking at the mining sector. So I don't have to convince them of the mining sector, but they don't know anything about it. They want to know, what is a drill hole? How do people mine this stuff underground? Is it still picks and shovels? That's the level of sophistication for people that are very smart. So when you say, the average Joe may be ignorant about this, it's the 1% of the 1% that's also ignorant of it.
And is trying to broaden that, right, that interest to the average day person, like, if you look around, if it's not growing, it's mine type theme. It's why should mums and dads care about it? Because it's everyone's got an opinion on the mining industry in some perspective, but don't really understand what's.
But I mean, there was a bit of a dichotomy in that when people were looking, they're not anymore, at carbon neutral technologies and a lot of that came from commodities that the mining sector actually produces or could produce, like lithium, like cobalt, like nickel, like copper, all of that. And then suddenly the people that were against mining said, well, where are we going to get this from? Scrap can't give us all of this, even though the Europeans were going over scrap over mining, but you have to build it first before you could scrap it. So, so that kind of understanding is still limited, even with the governments that are actually allocating capital to mining, even in a country like Canada, which is a mining country like Australia. There's still an ignorance about what this project would do, what it actually would produce. You would think that it would produce copper, but it doesn't produce copper. It produces a concentrate. That concentrate has to go somewhere, which is what the U.S. is finding out. That there's no smelting capacity.
I mean, it opens up an interesting angle here. It's for a long time, for decades, China's been building capacity and smelting capacity and downstream processing, and I feel some of that's been lost about the work they did behind the scenes for decades, securing oil supply in countries and the role China's played in that. And did they see something the whole Western world didn't want to see 3 decades ago, or what?
Well, I mean, the Chinese they're when I work for big American companies, and most companies, they have a budget a year. They have a like a business plan that might be 2 years, 3 years, and then a strategic plan that might be 5 years. And that's the same for governments. Like
3 years.
China has got 10, 20, 30, 50-year mine plans for their... And so they build everything thinking about what they're going to need in 10 years. So if a project is uneconomic now, the West would wait. Whereas China would go, I can get the uranium out of this place. I build a rail, I build a port, and then this uranium will be available to me in 5 or 10 years, and I am the consumer.
Yes.
The problem is that we're always thinking about, okay, now I got to think about the demand for my commodity. They've got it soup to nuts. They're more worried because their endowment is not as large, or in most metals as the Americans, the Australians, or South Americans, and so they need to procure this, and not only procure the commodity, procure it in a jurisdiction that'll let them do what they want. They don't want to change your government; they just want that commodity.
Yes.
They'll issue you debt and that, but they will own you.
So another important bit here, you've talked about the long-term thinking of China. So they're thinking 10 years, 20 years ahead, and they're allocating capital towards those plans systematically. Well, how does the West now, where the Western world's trying to reshore critical metal supply chains, get access to the metals or minerals required to underpin the whole economy? I mean, every industry requires the input of the mining industry and supply chains from it, but the disconnect, you mentioned short-term thinking or short-term structures in it, but I look at, for example, a junior explorer using one bucket within the mining industry whose access to capital is a spec price of a commodity at any point in time, like they're a physical trader of gold or whatever, when they're trying to solve a supply chain for 5 years or 10 years' time. So where do you see that disconnect, and is that the challenge in this world, or is the challenge finding the resources, or where's our challenge in the industry?
Well, there's a number of them.
Yeah.
One of them is your short-term thinking that, exploration, to your example, is a 5 to 10 year process where we're looking at funding every year.
Yeah.
And if you're not backed by significant long hold capital, if you don't hit that hole that year, then suddenly it's harder to raise the next year.
Yeah.
And then maybe you have to look for a different project that people are more interested in, or switch commodities, because now the market wants lithium and you were looking for copper, or now they want rare earths and you were looking for gold. But you're not a long-term company that's got access to capital that you could dictate the strategy and people will follow you.
Yeah, I do.
That's the kind of thing you need. You need somebody that says, okay, this is what I'm going to do. You've convinced the people that, and they're in it for that. They're in it for the 3 to 5 years, because it's you, that jurisdiction, that asset, your technical acumen, your jurisdictional acumen, whatever it is. But you can't keep doing it on a 1 year basis.
Yeah.
And the Chinese don't do a lot of exploration.
Not.
They want the project advanced.
Yeah.
And they won't pay you anything for exploration if they do buy you. Their big advantage for somebody that's selling to them is they bring cash.
Yeah.
So whether it's Equinox selling a Brazilian portfolio for $1 billion to get rid of low-cost capital, get high-cost capital in their balance sheet, the beauty of selling it to the Chinese is they'll give you 90% of that $1 billion is upfront cash. Not many people can do that.
No.
You don't want shares.
No.
And the Chinese will never offer shares because none of the shareholders of that company will want their shares.
And are they investing on cycles themselves, or are they looking?
Well, their cycle is long. Like the wavelength of their cycle is much longer than the wavelength of capital. So the problem with the junior explorer is the wavelength of value is equivalent to anything. Anybody who's exploring, no matter what you're doing, the wavelength is long, 5 to 7 years. But your wavelength of access to capital is short. Unless you're the Lundin Group, unless you're somebody who has access to capital, like like a Rio Tinto. But a lot of those guys aren't doing grassroots exploration anymore.
Oh, no.
So it's got to be the juniors. And now the beauty about the juniors right now is because of the demographic changes in the industry, a lot of the intellectual property, not the AI, but the IP, is in the juniors. Because a lot of these guys have moved from the majors to the juniors. And these guys in the majors have accelerated the career paths of some of their people, but they have worked for those people.
Yeah, I find this a fascinating topic.
And
right?
they're their mentors.
You had this, if you look at the history of mining, right, you had this amazing generative global teams that underpin Rio Tinto, Western Mining.
Yeah.
I mean, they grew up to a point where there was equal respect at board levels between generative teams.
You can walk into
the production
a boardroom and sell an idea.
Yeah. And now there's not a single major that's executive incentivized to have all production in 10 years' time. It's what's my profit going to be? What's this and what's that? Yeah. So if you looked at what the mining industry used to do, it was nearly like a Chinese model, right? But it was with major companies. Major mining companies had long-term vision, long-term thing, access to capital, and they put programs in place long-term. So the exploration well kind of sat in there, and they had all the support they required. So what happened? Why did that? Why the model that was successful? Why did that disappear?
I think it was a paucity of discovery. And so when we were discovering, we meaning as an industry, we're discovering new copper deposits and discovering gold. And I remember Silito put out this paper on the Pacific Rim and who was making the discoveries, and people were thinking it was the juniors, and it wasn't. It was the majors. It was Western Mining, it was Kennecott, it was Newmont. There was a lot of those companies that were making this consistently. Discoveries. And they were.
It wasn't a game of luck, right? It wasn't a game of luck. It was systematic.
So as a management team, it behooves you to fund that kind of growth because it was very accretive in terms of value. And so what you needed to do, this is my thinking, is that the successful teams is you lock down a highly technical team, focus on a jurisdiction, focus on a deposit, and give them a 5-year WIC and leave them. But the problem is that every year they have to sell internally as well. I've worked for majors where they would talk about their operating assets and the cash flow at a senior management team meeting, and all those assets that were generating the cash flow were all discovered. But then when they looked at exploration, they equated it to a cost. And then it said, well, that's interesting because all those things were actually found.
Yeah.
And then there was this exploration portfolio, and then there was this asset that was remote. I mean, remote in terms of a global, it was like here you were in the Pacific, here you were in Australia, here you were in North America, and then there was one thing in Central Asia. Go, what's that? Oh, it's this. Why do we have it? I mean, it's, blah, blah, blah. And then the guy said, get rid of it.
Oh, yes, please.
And then it was sort of, okay, just erase that pin. And people think that a lot of the decisions in management, the bigger the company, the more sophisticated the decision. I've been in those meetings. It ain't that way. We're all human. We all have our biases. And when somebody who doesn't know the value of something comes in to make a decision, they'll make an incorrect decision. And those CEOs are no longer like the Hugh Morgans or the Agnico Eagle CEOs that are there for 20, 30 years.
Yeah.
Almost like, I don't want to say it, but like a Chinese premier. So they can think long term. And people follow them because they're in there for a while. But most big companies, they go to 3 to 5 years and they bring somebody else in.
Yeah.
And then they, just like a government, change the underlying bureaucracy.
Well, fortunate enough to spend time with a guy called John Main. So he was head of Kennecott Exploration, went on to Rio Tinto. He was the MD of Rio Tinto's in the Americas. So I had a discussion with him as well. And he was one of those guys that found multiple tier 1 assets. Yeah, Resolution, there's a whole bunch of them. And he explained it this way to me is they knew the commodities that the company wanted. What does the world need in the future, and where does Rio Tinto or Kennecott want to play? What are the jurisdictions we believe where they were going to come from? And then he was provided time and capital to go and do that, right? Yeah. And very systematically across a whole bunch of things. And then he said what changed was the bean counters came into the big organisation. They did too good a job finding all these assets. They were a profit center. They were making money off the things that didn't suit Rio Tinto, funding the business as a profit center, and they were delivering tier 1 assets to a point. So his view is like, we did too good a job. Like we did that, but he said the bean counters came in and says, what's my return on investment on this exploration? And he said, well, that's not how we work. We work on this big platform and portfolio, and we have a platform portfolio. No, you want to spend $10 million on this asset. what's my risk return on this asset? He says, as soon as that thinking started coming into Rio Tinto and the big boys, that was the end of the exploration era. But it started the junior market. All these guys came out into TSX, ASX companies. They knew the assets, they knew the people, and it created this amazing industry. Have you seen much of that or heard much of that same story? Or?
Oh, yeah. I mean, it definitely exists because I used to work for corporates. And then on the junior side, it's those management teams that can attract the capital that think even longer term than the companies. Yeah. Because companies spend maybe $1.50 for every buck a junior does. And they understand that. So they would rather the junior did the work. Because then they don't put all these ESG safety things on them that cost them extra money.
Yeah.
And so they let them do what they do. And they're probably better at it. And they understand that. But their problem is that they don't have the funding for the big geophysical survey if they have to do it. Or, to do broad scale geochem or drilling program. They don't have that kind of money. And so sometimes with the grassroots, they'll fund that in terms of a joint venture earning, where a prospect generator gets a property, has a concept that the major never thought of. Yes. I mean, that's what BHP Explore is.
Yeah.
Is basically just buying concepts. Yeah. They don't pay for all of them. But, they select a certain few companies, but in the end, they've learned from 200 companies.
Yes.
And they might actually stake around the ones that they didn't get involved in because they didn't have to sign in.
No.
And that might be the better idea.
Yeah.
So the problem is that these guys don't have any ideas. They lack ideas.
They're production focused, they're bureaucracy.
They're dividend focused now. Yeah, so their growth is M&A, which is why the commodity prices are going up, because M&A does not bring you new production.
Okay. So you've had, I suppose we've looked at the long-term thinking is the way to actually unlock ore supply. If you can have systematic processes, long-term thinking, capital, and then you've got the majors used to do that very well. You've got the juniors now caught in short-term cycles, but there's 2,000 of them, right? So they're playing spreading the risk across it. Have we got an issue finding the projects we need in the future? Like, do you believe that there's a shortage of new projects to deal with where the world's going?
Well, it depends on the commodity.
Yeah.
And the other issue that you'd overlay on that is this market segmentation, where, before you would think, okay, as a supply chain or procurement manager, I'm going to get the lowest pound of uranium I can get. Whereas at Kazakhstan,
let's get that. Yeah.
And then your government saying, well, you're going to have to diversify a bit because there might be problems with getting your nickel from Indonesia or your rare earths in China.
Yeah.
And so the idea for critical minerals has changed somewhat for some people in calling them security minerals. So anything that some countries that you're over-dependent on can cut the supply of, that becomes a high priority.
Yep.
So it might not be lithium anymore. It'll be antimony. It'll be rare earths or something like that. Then they've finally discovered that it's sometimes not the geology, but it's the processing. Because there's no point in finding the mine if you still have to send it to China to process.
Yes. Yeah. And that, I suppose, one of the big themes in the world at the moment, the US reshoring and supply chains.
But they're doing it in a strange way in terms of the reshoring is just their shore now.
Yeah.
So, I mean, what they're investing in some outside, like in Australia, but they're doing a lot less in Canada, not doing anything in Mexico. So I'm not sure how much of that government funding, granting, and that is going to go outside. I know they did the Lobito corridor in the DRC to get copper out the west because the Chinese had all the infrastructure going out east.
Yeah.
So that takes copper from Kakula and from the from the Central African copper belt that goes up to the DRC. Maybe they do a spur into Zambia, but that'll take the copper out that way.
Yeah, it does.
But will they do more of those? Will they build a port facility like China did in Peru? That Puerto de Chancay is for Chinese stuff.
Yeah. Do you think government intervention into these supply chains is this going to help? We're seeing a lot of capital get allocated, potentially the wrong parts of supply chain.
Yep.
Some parts of the supply chain, there's a smelting issue and there's plenty of ore. The other times it's an ore supply issue. Sometimes you're seeing capital get allocated and policy to wrong things is, do governments need to step in here?
Yeah, but the problem is that some of them have money, and they'll step in. But like you said, the allocation metrics are kind of strange, and what they're allocating to.
Yeah.
And then so if there was a filtering method that you had in your head, this is what should get funded, it might not be that. It might be this. And then you're on, why did they get money and they didn't? And so understanding that, it'll be very hard. I've seen that with the Major Projects Office here in Canada when they said, oh, here's a major project. And you look at it and goes, oh, geez, that doesn't make any money. Why? And then I worry about it more because I'm a taxpayer.
Yeah.
But I don't really care what the U.S. government puts their money in, but I'm hoping it's in one of the projects I've invested in.
Yeah.
But does that change? Like the permitting in the States is much better than it ever was for the federal permitting.
Yeah.
And so people are trying to accelerate the projects now to get into that window. Just like people in Argentina are accelerating their projects to get in the RIGI window in terms of financing, in terms of repatriating funds, for any investment over 200 million US. So everybody's trying to fit into whatever window the government can provide them. And so what's happening in some countries, while some countries are moving forward, some are moving backwards, like increasing royalties, saying, we should have a bigger stake in the projects.
Yeah.
That's problematic because money moves fast.
Yeah.
And if you came in with a strategic plan of, I'm going to do West Africa gold over the next 5 years, and then find out Ghana raises its royalties and Burkina Faso wants a bigger stake in any project, even though you might not build it, the person that might acquire you would build it, doesn't want it anymore.
Yeah. So the challenges for the world moving forward, like, I might even frame this the other way. If you had a blank sheet of paper and you had the powers to put a funding model in place to solve the supply chains of metals or resources to this world, how would you go about that? Like, how would you go about that?
Well, depending what we call critical, but I would approach it like, and I have to jurisdictionally bound myself.
Yeah.
Let's say fine. U.S.
Yeah, U.S.
Canada doesn't consume. Yeah. Okay, we say U.S., then I'm thinking, well, what do I do?
Yeah.
And what we've seen in the U.S. over the last 25 years when I used to work there is that the manufacturing capacity was purposefully sourced out.
Yeah.
They were going to be a service industry.
Yeah.
And that's why interest rates stayed low. There was no push on labor rates or anything like that because the higher cost and higher paying manufacturing jobs were gone. And that took 20 years to do. And now you're actually trying to re-seam that when you really don't have the engineers, the manufacturing sort of capacity to build it anymore. And all that intellectual capacity now is in China. And when China was becoming the manufacturing powerhouse, the intellectual property was going from Europe, US, wherever, into China.
Yeah.
They have no patents. They took it, and they've evolved it.
Yes.
To 20 years more.
Yeah.
So the best smelting technology is in China.
Yeah.
And now if you know anything about rare earths and you're Chinese, you're not getting out of China.
Yeah.
So now we have to do it by ourselves. So what I would invest in is that technology. Like endowment isn't the question. You can get endowment, and that's why the Chinese are everywhere else but China looking for mines. You can find the mine.
You can find the supply chain.
But what do you do with it?
Yeah.
Where you process it? And since it takes a long time to permit processing facilities, that's got to be shrunk. You got to put in like more emphasis on engineering, on processing into your universities.
Yeah.
And you got to have them build those plants, industrial plants, in the best places. Port facilities and that, build that infrastructure, and then have the end user play a role. That is what they're trying to do with Project Vault. To say, hey, let's build an inventory. But the problem is, what is that inventory?
Yeah.
Because we don't produce nickel metal, we produce nickel concentrate. So are you going to have stacks of nickel concentrate or copper concentrate? Yeah. So if I do cathode, I have no smelting capacity.
Yeah, okay.
So those are the sort of things you'd have to think of it soup to nuts. But the problem is that it's kind of segmented, the thought process.
And where would the funding come from that? Like what's a funding model? Is it ASX, TSX?
Well, I can tell you, like,
New York?
TSX, importance of the TSX has been going down. The ASX may be going up. But now what we're seeing, because of now the emphasis in the U.S., something that's gone up from a low base has been the New York Stock Exchange.
Yeah.
So in the companies I have shares in, I recommend highly that they get off the OTC and get on the main board of the New York Stock Exchange, because a lot of my subscribers, a heavy proportion are U.S. I get U.S., Canadian, European, ASX, pick up some people from the Middle East, but those people, no matter what the liquidity is, they'll trade in the U.S. If it's an OTC listing, they'll trade that. But if you want a bigger fund in your New York Stock Exchange, you'll get preference. So it's very important not only to have that critical mineral sort of, moniker on your asset, being U.S. based, have a heavy weighted U.S. board, but then also be U.S. listed.
Yes.
And that's very important for them, because then the funds would just go, you're mine. Because I'm not going to invest in this thing that's on the TSX or in the ASX. I'll invest locally.
So, yeah, okay. So the ASX, TSX has been the source of funding. We're now seeing come
for early development and
type work.
But we have now the government, and every government's different. Now we have venture capitalists out of Silicon Valley.
So new investors are coming in. ESG investors, defense.
Private capital,
yeah.
Sovereign wealth funds,
yeah.
And also international agencies like the IFC, this International Defense, EXMIN, all these other ones. They're all in there. Then the question is, how do you allocate the capital? So some places, the money isn't the problem. It's the allocation.
And if you're looking this year, I mean, there's a lot happening. Obviously, there's potential. The Middle East war's happening and lots happening. Is there one thing you're curious about what might unfold this year as a final question?
What might unfold?
Yeah.
Everything. How's that? I mean,
it's a broad question.
Yeah, no, I have no idea. Was I predicting that Iran would get invaded this year? No, nobody was really. Was I predicting that the U.S. would want Greenland? No. Was I predicting that they would take out the president of Venezuela? No. I mean, I had no idea.
Yeah.
And problem is, nobody does. And then it's that underlying uncertainty in U.S. policy is what's driving everything, especially in the precious metals. It's not what they're doing, it's that you have no idea what they're doing.
Okay. The uncertainty.
The unpredictability drives the volatility, and that's why the preferences have been over gold over Bitcoin.
Yeah. No, it's been great to chat. So enjoyed your time, Joe. So hopefully we'll do a follow-up one day.
Okay, thank you very much.
Thank you. Bye.
Thanks for tuning in to this episode of the Critical Minerals Intelligence Podcast. If you want to stay ahead of the curve in mining, investment, and the evolving world of critical minerals, make sure you follow along. We bring you the insights, stories, and expertise you won't hear anywhere else. Stay with us as we explore the people, projects, and ideas shaping the future of this essential industry.